Well, look, I think the theme of Skillz is all about growth. We're in a $86 billion mobile gaming market today as of 2020, and it's projected to be $161 billion in 2025. So the market's going to roughly double in the next 5 years. And the way we think about the business is very much doubling down on what made us successful up through our IPO.
Hello. As a simple trader, I'm always looking for EPG. Yes, explosive exponential potential growth stocks. And today we are drilling into a stock that I believe could be extremely dangerous. Skillz, ticker symbol SKLZ, is a stock that for me represents a minimum 3x opportunity in a 1 to 3 year play right now, if not sooner. We are going to be drilling into the company, the numbers, and the hottest reasons as to why I believe Skillz at the current price represents tremendous value and catastrophic potential upside for the shorts. Stay tuned for this and more. Keep it simple. Well. On Friday, for the first time, I made a community post prior to loading in a new position, and I ended up acquiring my first lot of Skillz shares at $8.29. For me, this reminds me of a firm in every single way, but with more seasoning added to the mix. If you missed my deep drill in a firm when it was trading back at $67, then you're not going to want to miss this. Remember, I ain't no financial advisor, I'm just a simple trader. So no more plugging, let's start drilling. Before we drill a bit into the company itself, what they do and where they're going, let's get the numbers and metrics out of the way first. And where better to start than the short interest?
I can't speak specifically to why the short sellers out there decide to target us, but we certainly are very excited about having Cathie partner into Skillz. We're not sure how these reports arrived at their conclusions, but the claims aren't just flawed, they really don't reflect what we're seeing or what we're doing.
Which is absolutely going full tilt mode. What do I mean by that? The short interest for Skillz stock is over 20% depending on which site you look at, but according to shortsqueeze.com it's at over 23%. That in itself is a ridiculous short volume percentage, meaning 56.5 million shares are being shorted right now. This is already huge, but what else makes this a potential squeeze play in the making? According to shortsqueeze.com, Skillz has a 57.75% institutional ownership. Holy manure. What effect does that have on the float? So 242 million shares is approximately the free float when all insider and held shares are deducted. 242 million shares minus 23% being the shorts and minus 57.75% for the institutions. By my math, leaves us with around 46 million shares. That is a tiny amount of available shares on the market, meaning for me, this play has tremendous squeeze potential. Continuing on numbers, we have had 4 earnings releases from Skillz since they announced a merger with serial SPAC vehicle, Flying Eagle Acquisition Corp. Yes, it may sound cheesy, or you may be thinking, who the bleep? Well, all you need to know is that this SPAC is the 6th investment vehicle founded by Harry Sloan and Jeff Sagansky, and in April 2020, in another of their SPACs, they took DraftKings public via a merger with SB Tech and their Diamond Eagle Acquisition Corp. It's safe to say these boys know what they're doing. The numbers in the Q2 earnings seem very positive. Founded in 2012, they highlight that they have secured 22 consecutive quarters of growth. That is impressive, but shows they are just at the tip of the iceberg. Now, revenues grew to almost 90 million for the quarter, representing a 52% upside year over year. Gross profit followed the same trend. Net loss rose to $79.6 million during Q2, compared with a loss of $20.2 million in the previous year. Why is this? Well, let's take a look at their statements. We can see the increase in revenues is clear, but then the numbers for cost of revenue, R&D, sales and marketing, and even general and administrative costs have almost doubled. This is not necessarily a bad thing, and far from it. For a growth company, you would want them pumping money back into R&D and sales. Reinvesting money into the company at this stage, especially as it just went public, is key for me to see it growing organically, but creating that exponential growth probability in the medium term. And the biggest thing to note is Skillz have zero debt. Although nothing spectacular, but positive nonetheless, is for the Q2 earnings. They updated their previous guidance on their revenue expectations for the full year 2021 from $375 to $376 million on a standalone basis, but factoring in revenues from Archie, who they acquired in this quarter, brings the projected revenue to $389 million. Considering for the full year 2020, they raked in $230 million of revenues. This would mean a 70% increase year over year for 2021 if they hit their guidance. That is huge, and if you start plotting the graph, it will look exponential right now. Okay, so who are Skillz and what do they do? They are a leading mobile esports and games e-platform that connects players in controlled competitions. The actual platform helps game developers create multi-million-dollar franchises by enabling social competition. Esports is a huge growth sector right now, and the fact that Skillz is right onto it and is probably the leader in its field means it is already ahead. They claim to have 30 million plus players, 30,000 plus games developers, 5 million plus daily tournaments, and in excess of $100 million in monthly prize monies. They have had huge partnerships with the NFL and Big Buck Hunter, for example.
Speaking of great games, earlier this year, arcade game developer Play Mechanics approached us to build a competitive mobile version of one of the nation's most popular arcade franchises, Big Buck Hunter.
Now, unless you're already well into esports or have some basic understanding, like me, you may be asking, is this whole esports thing really a thing? Well, according to the latest Skillz investor presentation, the GMV, total entry fees paid by users for contests hosted on the Skillz platform in 2020 equated to $1.6 billion, and even more mind-bending is they held 2 billion tournaments in 2020. Are you for real? That is crazy. That is an average of 5.4 million tournaments in a single day. But this is still not the most bullish metric for me. Check this, their paying user retention, or minutes per paying user per day in 2020 was off the scales, beating the likes of TikTok, YouTube, and even Facebook.
So yes, fundamentally, the reason Skillz is so successful is we're converting about 8 times as many payers per 1,000 consumers that use games on our platform as the next best alternative, which would be something like in-app purchasing. When you think about the reason for that, it's really because we're providing a better value proposition to the consumer. We're offering them fair, fun, and meaningful competition in their favorite games. And we've completed now 3 different market research studies that show that willingness to pay is actually upwards all the way to potentially 40% of consumers. So we think there's a lot of room to expand from here.
Their 2020 revenues were incredible and grew 92%. That's almost doubling from 2019. I think the pandemic and lockdown certainly helped push this, but e-gaming is a trend that in fact precedes the pandemic. As we note, Skillz grew revenues in 2018 by a whopping, mind-bending 201%, and in 2019 followed it up by 136% year over year, signaling the start of something big in my opinion. We are now seeing by the outlook that the growth is still strong for 2021. And why is that? In this slide, the numbers tells the story. Gaming in general has surpassed movies at the cinema, music, and books. When you add those 3 sectors together, you are on par with gaming alone. This is a goldmine sector seemingly ready to be taken. What I love about Skillz is that they are a platform. Think of them as the DNA of the future e-gaming world. It enables both developers and players, meaning income generation from all sides. If you think of it in a really simplistic way, their business model is not so far from an Amazon.
We followed a similar approach to other marketplace businesses.
If they can go international, they could then open up the TAM, target addressable market, to an explosive $125 billion opportunity.
International is a huge piece of that. Today we're 95% payer in North America versus a market which is about 80% outside of the US. So we'll be expanding into India. We announced that several times throughout the year, but we're planning on entering in Q4. And we're just heads down, toiling away, growing this business.
According to this article, the gaming market size is set to reach close to $400 billion by 2026. Skillz are in a prime position to capitalize on this moving forwards. According to Fintel, Morgan Stanley are the largest institutional investor in Skillz. But when you add up the holdings in the ARK K and ARK W funds, you will see that actually Aunt Cathie holds more Skillz stock than Morgan Stanley right now. It seems you cannot really talk about Skillz without at least acknowledging the strong backing they have from ARK Invest. Why the conviction? Remember, Cathie Wood is famous for her Tesla conviction, which took years to come to fruition.
Because you made a lot of waves by attaching a $4,000 price target to the shares at one point.
Yes, our conviction has increased in the last year or so. It's our largest position. It's down about 29% this year. And it's always been our largest position this year. Disruptive innovation is characterized by controversy and volatility. And so we know we're going to get opportunities to buy stocks. We lie in wait for those opportunities. Many people think of, because of what we do, disruptive innovation, that we're momentum driven. Absolutely not. We lie in wait. So if you just take Tesla alone, 2018, you're right, the roller coaster. If you take away the performance of the stock, which was up last year, just take that away. And just look at what happened, what we delivered in alpha because of our trading around controversy. We delivered 175 basis points just from Tesla. And we get opportunities like that throughout the portfolio.
I think clearly ARK Invest sees the same explosive potential right here in the e-gaming world. To summarize, with Skillz hitting all-time lows, I think this is as good as a time as any to strike. Don't take it from me, but just look at the analysts on say Market Beat, where the consensus target price right now is $23, representing a 185% potential upside. Holy manure, $23 for me is still rather conservative, but you know how these Wall Street analysts work, so take that with a huge pinch of salt. Thanks for watching, and please note, I strongly believe Skillz will be erupting very soon, so please take this drill with precaution, and always do your own DD. If you found this video informative, then do me a simple favor and consider subscribing to my channel so you can get a pop-up when a new video is uploaded. I am a simple trader. I try to keep this simple and will simply see you in the next video.